The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, everybody. Tommy O'Brien filling in for Steve Rhodes this afternoon. Steve, he's tied up with an appointment. He is going to try to make the 2 p.m. time slot to have his program running live, but we got a lot of action in this market, and I wanted to jump in the saddle and keep it live for right now. If you got any questions, folks, shoot them over in the Tigers Den, shoot them over in the YouTube Tigers Den. I see everybody over there. Robert, Super Trifecta, we got everybody. Baseball, EKS, our man Jeff in there, always watching everything, so check it out. We'll talk some of what we have going on in this market. And yeah, we'll go a little bit more big picture than I did for the morning market kickoff. Breaking down everything because, boy, we got some big pictures happening, man. You talk about it. S&P's right now up 1.6%. I keep talking about it, but it is absolutely remarkable what we are approaching off of the lows Monday coming into the opening bell. You have the S&P's down at 51.19. Just like that, we're up 230 points, folks. 230 points. S&P's are up almost 5% from where you were 48 hours ago. You talk about volatility, let alone the slide we had from 5,600 down to 51.19. We're back at 53.52. If you just look at the intraday action yesterday, all right, we were at 53.40 intraday. We're now about 10 points above that price level. You drive down 100 points till after the close, and you get back those 100 points by 9:45 in the morning. That is a volatile market that is not quite sure where it should rest right now, and we will see. NASDAQ 100, similar action as well. The NASDAQ now, I was doing this on my program at 9 o'clock this morning. What are we at right now? You're at 18,540, all right? That is about 1,200 points above. It's really 1,190 to be exact, above the lows we had Monday intraday. And that on a percentage basis is 6.85%. The NASDAQ 100 is up almost 7% from where we were on Monday's lows. You talk about a bounce. We'll see if it holds. We got a lot of volatility coming down the line in this market for the foreseeable future, folks, as there are unknown variables that are existing, and that is why you're seeing 7% down, 5% up, etc. We'll get into the yen in a moment. That's a big part of it. Dow up 428, 39,566, and we got the Russell up by 22 points right now. Bitcoin, the ultimate growth stock, you could say, to a certain degree, commodity stock, ETF, whatever you want to call it, down $600 today, 56,625. You were at a low of 49,000. So, yeah, you're up by what? 12%, 13% from those Monday lows. But obviously, Bitcoin trading with extreme volatility. Crude catching a bid. $71 was the low on Monday. We're trading at 75.46. Looks like the growth slowed down, not as dramatic as once feared on Monday. And you got gold up $8 right now at 24.39. We got to talk about notes and bonds because, boy, it is quite a move we got going on. We had 3.68% was the yield on the 10-year. That was quite a yield when you think about what that was illustrating in terms of where the Fed was coming. And just like that, we're right back to basically 4% right now, which is remarkable. We're sitting at 3.96. So you're up almost 0.3%, 30 basis points in the 10-year over the span of about 48 hours. We're now back to right at the beginning of Friday. Think about that, right? The beginning of Friday, not Friday close, not where we were on the Monday spike. We now have yields back to about 4%, which was right where we were Friday. The one thing to consider, and this is where we're going to go a little big picture, okay, is you're always going to have oscillation and volatility in both directions. This graph is very easy to illustrate that we have higher highs and higher lows at each step along the way. This one being the highest high recently, and it's just going to be the highest low recently as well. We're back to 4% right now. But yes, I imagine that the cuts, they are coming. It's just what degree they're coming with. That's what nobody knows right now, okay? I think 25 is baked in September. It's a lot more than baked in than that, okay? But the market reaction had a lot to do with the yen. When you look at the yen in terms of where they are, and we have comments calming that market down from the deputy governor over there today. You're seeing the spike up to 147.50. And let me see if we get that article up there, because that's an interesting one. We're going to jump over. Here it is. Yeah. So this is an opinion article, and I did talk about it at 9 o'clock. We're going to touch on it briefly, but this is a big one. And you got to keep your eye on the yen, especially when you consider what just happened, as there was an unraveling of the carry trade. And what did they do? They're placing the carry trade yet again, right? So the statement out there from the Bank of Japan Deputy Governor Uchida: financial and capital markets at home and abroad being extremely volatile. That's putting it lightly when you go down 12% in a day. Worst daily decline, even worse than 1987, okay? Noted early Wednesday that the central bank needs to maintain monetary easing for the time being. Folks, they've been at like 0% for decades. And they're going to maintain easing right now as they're trying to lift off the zero bound, just because the market went down 12%. But what does that do? Now, this is Mohammed El-Arian out here, opinion piece, okay? There's a big difference between when Bloomberg just calls the news and then they have an opinion, okay? Because nobody knows where this is going to play out. This is an opinion. But I tend to agree that Japan, if they can't come off 0% interest rates right now, when everybody else has been higher for longer. And for some context here, in terms of what their stock market looks like, okay, now that is the meltdown, which causes them problems. 42,000 to a low of 30,000 in the span of less than a month. Okay, 30%. 30% in the span of a month. This market just crashed. But context and big picture, like we're going to try and go, is that this thing's been on a one-way trip with, higher highs, higher lows, right? You get a little volatility in COVID, to say the least. You drop in COVID from 25,000 down to about 15,000. Okay, that's a 40% hit. Everybody was getting hit then. But we just went from the year 2012 of 8,800 to 42,000. 8,800 to 42,000 while they've kept rates at zero. And of course you're going to face some pain when you pull back from there. But it's probably warranted. And now how do they deal with that struggle? As what have they done? They've given the message of easing yet again. And as they come in with that message of easing, what do they have? Bloomberg's reporting that hedge funds and other fast money accounts rush to place new carry trades. Well, if they're going to be easing, then yeah, let's do the trade again. If they can't pull themselves off that boundary, let's do the trade again. Let's borrow the yen, right? Because the yen is not going to go up. They're not going to hike. They're going to be in an easing stance. Maybe they stay there for a little bit of time to let the market accommodate. And what happens? Well, the yen drops again. And that's what they needed to that degree, because the market flipped out. But context is important. Big picture is important. You can't go up forever. This thing just went from 8,800 to 42,000, and they cannot come off the upper boundary without the market absolutely flipping out. And now the Bank of Japan is freaked out yet again in terms of how do they navigate that environment, and especially when I'm sure they were getting a few calls from central bankers across the globe saying, hey, you're kind of causing a global meltdown here. You got the Nikkei down 12%. You had our futures crashing anywhere between 3, 5, 7% across the board. But yeah, they said, don't worry, we're not going to do that. We're going to ease right now. Just be aware that that is on the perspective in the next year or two and how they come off that bound. All right, folks, stay tuned. We got the S&Ps up by 72 points, NASDAQ up by 307. We'll check in on some of the equities with earnings today. We'll be right back, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien filling in for Steve Rhodes. He's hoping to be back in the saddle for the 2 p.m. time slot today if he can make that one. He had an appointment early today, so I'm jumping in for double duty, but we got quite a market, man. Why not? SMHs, we're up by 2.2% right now, so we got a question over here in the Tiger's Den saying maybe weekly forming an epic head and shoulders. Early September, the 0.382 bounce completes, and yeah, maybe looking for some puts if we're looking for a head and shoulder to the downside. And yeah, hey, it's possible, man. Your head could be 283, right? You got your shoulder area. If we come into that area to a certain degree, and it's been quite a run. Anything that's had quite a run, folks, you just got to be aware of the moves that are possible. Now, what I will say is you just came back and tested this area that you had in April, okay? And boy, you came down in some volume, and we bounced off that area. But it's going to be interesting to see if we come back down there again. Look at the volume area that we just had in this price area of about 200, right? You made it back down there in April with a low of 198. That's on April 19th. And then 199.15 on April 22nd. You just drove down to that area on Monday morning of a low of 249 pennies. And just like that, we're 10% already off of those lows. But the one thing is that, you know, you're flirting with that 682. It's been quite a retracement of this move that we had from last November, from 136 to 283, right? 136 to 283. You're talking about more than 100% gain, and we've tested below the 50% on a couple times. You did hit that 200 area. So if you're looking at it, that's going to be a critical area, especially because of all this volume you got down there. Now let's take a look on the weekly like you were talking about, okay? There's the weekly, and yeah, you're going to form that shoulder area on the parallel side, opposite side in terms of the right. And yeah, look at the volume you're coming down here that we had last week. That volume, 75 million, okay? Only to be matched by 68 million when you were up here at a high of about 239 back in March. But boy, that is quite an acceleration. And you add up the three of them. In terms of July, you did 50 million, 54, and then 74.5 million. And we're probably going to do it this week as well, because we're already at 38 million, and we're basically barely 2 days into the trading week, right? We're 2 days into the trading week, as in you're only an hour and 50 minutes into the third trading day. We got 4.5 hours to go today, along with Thursday and Friday, and you're already at 38 million shares traded. And let's see where we are on today. We did 15 million yesterday, 18 million on Monday. We're only at 4.5 today, so you're going to get quite a lift. You'll probably do, what, 10 million at least today or something like that? So that's going to push us up to 33, 38. That's going to be almost 45 million by the end of the day on a weekly basis. So keep your eye on that one. That 200 area is going to be a critical level if you're looking for a lower price. See how it trades around that 200 area, because you have an area that we bounced in early April. And if you come back down to that area, you're going to have to blow through all this volume. And if you blow through that volume, though, then watch out, man, because there's nothing saying. The world was okay last November, folks. Okay, don't think that this market can't trade back to where you were less than a year ago, because the world was okay less than a year ago. All right, that's the thing to remember in some of these, right? The world was not falling apart. Stocks were okay. We were doing all right. We weren't where we are right now on some of the tech stocks with the run we've had. All right. You had the NASDAQ 100 in that similar price range at about 14,000. Okay, the world would still be fine if we're at 14,000. That would still be up from 10,000 at the lows of October of 2022. So looking a little big picture, pretty remarkable. The NASDAQ 100 holding up so well from that run you had beginning in January of 2023. You compare that to the semiconductors, okay, and we started in the same thing. Now, I just started it conservatively here. But yeah, you start this run really when everything began to rock. And we're not even back to the 382 yet. The 382 lining up at about 189. And it is interesting that I think, let's add another one here. See a little area of confluence potentially. Yeah, not quite. So the 50% and the 618 line up, or the 50 and the 618 of those two, but you don't get the 618 and the 382 lining up, which is what I like most. So yeah, that critical area of where you came down and tested, the lows that we've had this week, keep your eye on that one. That's going to be an important price point, especially with all the volume you have coming down the line. All right, let's take a look at some of the equities out with their numbers this morning. We jump over. No, Lyft, excuse me. I always jump to Dash. Lyft. They claw back some of the losses. They're down by 11.4% for Lyft. You jump over to Disney. Disney down by 1.8% for their numbers. Airbnb, the one that really was taking it on the chin, a little bit higher than the lows that we had. Airbnb down $16.60 though. Yeah, look at that one, down 12.7%. And then we jump over to Instacart. We were having a good conversation about Instacart. Positive after rolling over negative on the open. And that's one that we all find, it was great. That actually got people talking in the Tiger's Den, Instacart. A lot of great uses for it if you use it correctly. You know, I mean, Jimmy was in there. He's saying that you got stores that have the same exact prices as what's on the app. That's not the case with me. When I'm shopping at Publix near me, which is what I use it for most often for groceries, the prices on the Instacart app are more expensive than the prices in store. Then you're going to pay a service fee. Then you're going to pay a delivery fee unless you sign up for the yearly, which is like $100 or maybe save money. And then you're going to pay a tip on top of it. So that's a tough one. Nonetheless, you're up today on Instacart, up 3.2% with this market trading higher. We check in on some of the FANG stocks. We'll call them Magnificent 7, I guess. FANG, when's the last time FANG got used? Amazon shares up almost 3% to 166.60. Let's go back to a shorter term time frame. See the chop this morning. Yeah, holding on to those gains somewhat well. You jump over to Apple shares. Apple up a similar 2.8% this morning. You got Microsoft up by 1.8%. You jump over to Meta shares. They give back some of the gains. Meta just traded down almost $15 from that open. Still positive by about 0.5% on Meta. You jump over to Tesla. Tesla down by 0.9%, 198.75 for Tesla shares. And we jump over to NVIDIA shares, up by 0.5%. They give back some of those gains, trading at 104. AMD shares up by 3.4%. Intel shares up by 1.5% so far this morning. All right, what else we got? You jump over to Rivian. Electric vehicles out with their numbers. Rivian, let's pull over the article here. Tops Wall Street's second quarter expectations amid cost cuts. But yeah, not exactly what the market was looking for. As you're down on a positive day, you're down by 3.3, and you were much lower as the market was looking for more from that equity, to say the least. Nonetheless, earnings per share, a loss of $1.13, slightly less when the market was looking for. Revenue, slight beat, 116 versus 1.14. The company's net losses widened during the second quarter. Yeah, compared with a year earlier. Pretty remarkable, just losing money hand over fist. They reaffirmed their guidance of 57,000 total units of production, a loss of $2.7 billion in adjusted EBITDA, and $1.2 billion in capital expenditures. Imagine going on Shark Tank with those types of numbers. I always kid. Shark Tank, man, not exactly a real-life situation in terms of what they're offering and what's getting offered, but I do laugh at sometimes some of these companies, right? If you came on, you say, listen, we're a car company. We're going to make 50,000 cars this year. We're going to lose about $3 billion. And we're going to spend over $1 billion in CapEx, though, to make sure we're right. And they said, well, what's your valuation? What valuation are you coming in with this company that's losing billions of dollars, that's losing all that? And I said, well, I'm going to value this company right now at $15 billion. Yeah, interesting. We'll be right back. We got some other equities. We'll take a look at markets. We'll take a look at some currencies. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps holding up relatively well. We're up 73 points right now. Can't help but notice the VIX and the absolute volatility suck out. We're still down by $5 just from where we were yesterday. You got a little bit of a spike towards the end of the day as the market sold off. Now think about, though, how fast this has dropped from where we were even yesterday, right? We talked about intraday. You had the S&Ps sell off 100 points from where we were. And you only had the VIX going from about 24 to 27. We're back under anywhere we were intraday yesterday. And you have the S&Ps basically sitting right at the intraday highs that we were at yesterday, 53.40. It's a critical level. You see how quickly things can fall apart. 3 p.m. yesterday, we're up at this exact same price level. And just like that, by the end of the session, we're 2% lower. Right? Dramatic moves when you talk about it, man. So keep those fingers quick. Anything can happen in this market for sure. All right, we'll talk a little bit of yields. Why not? I talked about on the program this morning, mortgage rates coming down. But how about the 20-year? Yeah, time to say goodbye to the 20-year, man. Even Mnuchin, the guy who started it, agrees that was a mistake. All right, can't bring back the 20-year when the market doesn't want it. Mnuchin even says it's time to kill the new T-bond he created 4 years ago. As Treasury head, he said, let's bring back the 20. No, the market said, no, we're not going to bring back the 20. It fell flat with investors. And he says the U.S. should dump it. And from the stats they have in this article, you would have to agree, because you talk about burning cash for no reason. So since the Treasury reintroduced the 20-year bond in monthly auctions 4 years ago, their sale has tacked on roughly $2 billion a year in interest on top of what it would have otherwise paid by simply going with the normal ones, okay? The 20-year is detached from the rest of the market. It hovers at yields that are far higher than those bonds surrounding it, the 10 and the 30. So they've tacked on $2 billion a year in interest. And guess what? If it's a 20-year bond, you multiply it times 20, that's $40 billion extra. That's roughly extra interest on top of what the government would have otherwise paid. And yes, okay, they make the point. That's a small amount of money when you're talking about spending $7 trillion annually. But what are you doing if that market is drying up and you can't do it, and therefore you're paying higher interest rate to push it out at a 20-year for no reason when you could push it out at a 30-year or a 10-year in the same degree? Raise the matter with most bond market experts, and they'll hem and haw about whether to eliminate the 20-year bond to save money. Of course it's complicated, right? But it seems pretty simple if you're detached from the rest of the curve. And for some reason, the market was just not willing to let that one come back in. There's not enough demand. As a result, you're paying a higher interest rate than you would have for the 10 and the 30. And so, yeah, we'll see where that goes in a volatile interest rate environment, to say the least, as you got the 10-year continuing to drop as we approach the price level where we're almost at. We might get to 4% by the end of the program, man. It's 11.33 right now, and we're sitting at 3.95, but we're up 6 basis points already in that 10-year, and we only got 5 more to go to hit the 4% mark. We're trading right now up by 14 ticks on the 10-year. All right, we jump around to some of the other equities. Shopify, they're crushing it, man. Shopify up by 22.7%, $12 to the upside. You take a look at longer term on this equity, and yeah, it's been quite a run. Earlier this year, you were up to $91. You're trading at 66. You came into this earnings at 48, so you basically almost got cut in half, as you just got extreme volatility on some of these equities. You were down as low as $24, 23 to be exact, in October of 2022, well off the highs of 176 when the whole market got ahead of itself a little bit over its skis towards the end of 2021. But Shopify, strong earnings today, up by 22%. There's your short-term time frame. They pop in the pre-market, they pop when we open, and we're up to 66.50 on their strong numbers. We check in on some of the other equities. Disney, as I mentioned, down about 2%. We check in on Rivian, down about 4%. CVS out with their numbers, basically flat right now. For CVS, we check in on Instacart and holding on to the gains, up by about 4% for Instacart. You know, Disney, what's interesting here is, so they actually turn a profit for the first time in their streaming segment, a quarter ahead of what they were thinking. And, you know, part of that helped by, of course, the movie The Inside Out, I think, the animated one that grossed $1 billion at the box office. You have out there Deadpool and Wolverine, crushing estimates that they were looking for, biggest R-rated movie out there as well. But now they have some problems in parks. And we'll see how that translates forward. Disney right now down by 1.8% for Disney shares. All right, we check out on some of the FANG stocks. Magnificent 7. Amazon holding on to gains, up by 2.7. Apple shares up by more than 3%. Quite a pop for Apple. You know, there was a day and a time, man. And that's probably part of the reason that maybe you had some selling going on over the last quarter from 237 down to below 200. Warren Buffett exiting a position, tens of billions of dollars, upwards of almost $80 billion, right? Selling 50% of his stake in Apple in the last quarter. So that could have happened anywhere. Think about it. He was probably selling into this rally. Where he was exactly, we're not sure. But nonetheless, in those filings, he had sold. And pretty remarkable how well you're holding up on an equity that has a departure from a stake like Berkshire. The other company he was selling, Bank of America. He wants nothing to do with the banks right now. You got to be aware when somebody like that is selling, they see something. They're looking at risk reward, okay? Doesn't mean they're going to be right, but he's looking at risk reward and valuations of some of these equities when you got a company like Apple, okay? I was having this conversation with Jacob the other day. So Apple's at $3.25 trillion, $3.25 trillion, okay? Apple has 15.2 billion shares outstanding. They're up $6 today. Okay, Apple is up $90 billion in market cap today alone. $90 billion in market cap today alone. I compare that to a company like Intel that is valued at less than $90 billion overall. Apple could buy Intel with just the market cap appreciation it had today alone. That is how big of a company it is. It has become. Okay, and you look at, and that's not saying they're going to buy them. Okay, it's just putting in context of where they are versus some of the different companies across the world. You look at Apple and the run it has had, 15 billion shares. You're trading at 164. We'll call it 160 for simple math. You trade up to 230. Okay, so what is that? $70 that you traded up from April to July. You traded up $70 of a company that has 15 billion shares outstanding. Every $10 is $150 billion that you're going up. And so that is $1 trillion Apple just gained in market cap over that period of time. Do you hear that? $1 trillion in market cap from April to July. So don't be surprised when you see investors coming in and, you know, Buffett saying, hey, that market cap just gained $1 trillion. Where is my risk reward in this position? And he decided to sell a chunk of his position. So be aware of those types of actions because that is an obscene amount of money in a 3-month period. We've probably never seen anything like it in our lifetimes. Stay tuned, folks. We'll come back. We'll take a look at some of the other equities. We'll be right back. We'll take a look at that yen again.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets holding on to the gains. Been pretty easy on the chop since the open. We got the S&Ps right now up by 72 points, and you see we've just been chopping around between about 53.30 and 53.50 since that opening bell just after 9:30, and we're right in the middle of that range at 53.40 right now. NASDAQ 100. Pretty similar action, right? We open at about 18,420. We make it up to 540, and we're approaching the lower boundary line right at 18,440 as well. So we jump over to Intel. We've been talking about some of these chips, man. Watch out for this equity, okay? Let's back it up even a little bit further for 10 days. Yeah, up to 32, down to 20. You want to really see some carnage. There's some carnage for you. 50 to start the year, down to 20, well below where you were towards the end of 2022. And you really want to see something wild. Intel, a company that makes computer chips, is back to where you were at 1997 prices. 1997, right? Wild in terms of the absolute failure that they have had over a period of 27 years to not have their stock price appreciate over that time. Absolutely wild. Now, I pull up the article over here from Bloomberg, okay? And this could almost be a little bit of an opinion piece as well. It's not listed as an opinion piece. But there's a lot of opinions to go around, especially on a stock like Intel, and I would be very wary of investing in Intel. And listen, this is just like anything. If you really want to take a flyer, then yeah, they turn things around. You're going to get some extreme multiples, but realize you're getting those extreme multiples on a company like Intel if they turn it around right now because of the absolute abject risk that this company has of almost complete failure at this point, okay? Intel has lost Wall Street's patience as headwinds keep mounting. I would agree. The stock collapsed after weak forecast, a dividend suspension. The chip maker is least liked among peers after multiple downgrades. I'd say that's putting it lightly. Least liked. That's quite a kind verbiage, I would say, in terms of looking at that chart versus looking at some of the other charts of their peers, okay? And here's the thing to wrap your brain around, is that they are on a fantastical story of a turnaround right now. And that is where, if you get that turnaround, yeah, you're going to get extreme multiples, okay? But be aware that it is the highest of risk. When you're talking about a company worth only $89 billion, I just told you, Apple alone, okay? And this is the point. If it was easy enough to turn around a company like this and just start competing with AMD and Intel, and NVIDIA, right? Think about it. In theory, and this is not going to happen, okay, but this is a $90 billion company that's somehow saying, hey, they're going to slash 15,000 jobs, stop paying a dividend that they've been paying since 1992, okay, and what are they going to do? They're going to invest heavily to begin competing with their peers that they've been blown past by, okay? If it was that easy, folks, to do that, you could theoretically have Apple come in, and this is just the way, in terms of how hard it is. This is not an analysis that says, oh, Apple should do that. This is an analysis that shows you how difficult it is, what Intel is saying that they're going to do. In theory, Apple could come in, buy Intel for $90 billion. They'd have to pay a premium. Of course they would. They'd have to pay a premium above what it's trading at, and then say, we're going to sink $100 billion into this company and begin making our own chips. They're not going to do that because it's not that easy in itself. Okay, so to think that a company like Intel that's only worth $90 billion is somehow going to slash employees and just spend enough to begin competing again with the companies that have blown them away, if it was that easy, folks, anybody would do it. It is not that easy. And the problem is, when you start cutting, there's not going to be anything left in this company if that turnaround plan does not compete. Okay, Intel has a lot of competition, a lack of relevant products, and the turnaround is expensive and slow. The valuation is not a bargain, and with the increasingly heightened concern over the state of the economy, it's too soon to say the worst is over. It doesn't even matter who said that, okay? It's a reasonable take. Be aware of this. And it is interesting when you think about, right, something like that. Because could you imagine if Apple ever wanted to get into the chip business, as this market sells off a little bit right now, if it was that easy to do, then you'd have one of the bigger companies coming in and saying, I'm just going to buy Intel. If they're about to compete with AMD and NVIDIA, why wouldn't I buy the whole company and make sure that I have a supply of chips coming down the line? Now, I'm super generalizing, but it just puts in perspective how difficult the story is that Intel is spinning out there when they say that they, are going to lay off workers, cut their workforce, spend money, and just start competing with the peers. That is a difficult, if not impossible, task. The market is reacting. You're still valued at $90 billion, and they're going to have to spend dramatically on research and development to keep up with the likes of, NVIDIA and AMD in particular. NVIDIA, where are we on market cap? $2.5 trillion. AMD, where are we sitting on market cap? $215 billion. Yeah, I'd take AMD at $215 billion over taking Intel at $100 billion any day of the week right now. Doesn't mean that you can't have a small portion of your portfolio for a flyer in Intel, because you will be rewarded with the risk you're taking accordingly, but just be aware that the risk you're taking on Intel is extreme, to say the least. And AMD at only $215 billion versus Intel at $100 billion, when it seems like Intel can do nothing right and can't compete, that is quite a growth story when you're talking about a company and the whole valuation is based on this dramatic turnaround of cutting employees, spending money, and somehow turning that around. What happens if it doesn't work out? Well, what happens if it doesn't work out is that $90 billion goes away. And they're on the verge of that happening. It's that real when you look at it. You don't think that it can happen? Just remember that Intel is trading at prices it was trading at in 1997. Wild. All right, S&Ps right now, positive by 50. We're giving back some of this action. I was just talking about how we were chopping it around in a range at about 53.20. We're breaking below that level. We're at 53.15 right now. NASDAQ 100 also breaking below where we were, making intraday lows. Still up 1% for the NASDAQ 100. Let's see what's driving this market lower right now. Amazon's still up 2.3, but we roll over a bit. You got Apple shares up 2.3, a little bit of a rollover going on. Microsoft, they're down from 410 to 405 right now. Tesla off 1.7% right now. Be careful of Tesla, too. I've been harping that one for a while, but boy, that's a dicey one in terms of a story of the future as well. Yeah, we check on those SMHs, up about 1%. As I mentioned, that 200 area, all this volume down here, that's going to be the critical area. Especially, take a look at this daily, right? That's going to be a critical area. Same as where we were back there in April. We'll see how we react if you get back down to that area in the SMHs. The volatility is not over, folks. Might have been a turnaround Tuesday, and we're continuing to a turnaround Wednesday. But you don't get this type of volatility, and then it just goes away overnight, especially when we are on the verge of a cutting cycle, and the market cannot figure out whether we want to go 75 basis points emergency cut or we just go 25 in September and then skip a meeting and go 25 again. That's not what the market's saying, but the market has been wrong before. Remember that one, folks, for sure. All right, we got one more segment, folks. And remember, I'm filling in for Steve. He's going to try and get back here for the 2 o'clock hour, but we got Fast Market coming up at 12. We got our man Larry Pesavento coming up live at 1 o'clock. Steve Rhodes, hopefully in the chair at 2 o'clock. And we got Jacob Shoup filling in for Tom O'Brien live at 3 o'clock. We got one more segment, though. I'm coming back, folks. Stay tuned. S&P's up by 1%. Be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. The S&P's up 57, and yeah, to our man, who wasn't in there asking? Daniel. We were talking about Rivian, I think we were, in the YouTube Tiger's Den, and check out this chart. So Rivian, out with their numbers, they're losing more than they were a year ago. Down 2.5%. Pretty remarkable how they were able to push paper out to the public late 2021. A pre-revenue electric vehicle car maker valued at, well, let's do it. When you ran up, I mean, I think they pushed it out at like $70 or $80, ran it up to $180 at one point. This is a monthly, and then they popped that balloon and you trade it down to $8 this year. You're back to $14.39. They're down by 2.7%, just so you can see how high this thing actually was at one point. You put it back on a 3-year weekly. We zoom in on this run, and we are bumping up against that channel line. The one thing on Rivian, man, you're going to have to break above this one. But the one thing I do like, again, Jake and I were talking about this one the other day, and he likes Rivian, and I think rightfully so, man. I think he's onto something. you only got a company valued at $14 billion, okay? And this is where things do matter in terms of the context of a larger picture. When I'm talking about Intel valued at $100 billion, there is an extreme amount of destruction of wealth that could occur there if that company doesn't turn things around. Okay, you're not going to be worth $100 billion if you're a company that's trying to cut and grow in that chip market. Versus a company like Rivian that probably has a future, and you're only valued at $14 billion. If they turn that around and they exist, yeah, you can probably run that up to a multiple of $50 billion, $60 billion, $70 billion, something like that, okay? Remarkable that you're talking about a company with 1 billion shares outstanding, and you ran this thing up to being valued at $180 billion. Meanwhile, you're losing money for a period of years on years. And the news that came out on Rivian, okay, the headline there, is that they lost more than they lost a year ago. Yeah, they lost, let's see, 1.46 billion, and it's awesome. They have 1 billion shares, so that's why everything lines up, right? They lost 1.46 billion, which is $1.46 a share. They only lost 1.2 billion a year ago. Losses are still going up on that equity. So be careful on Rivian, but longer term, yeah, you probably got to play if that thing exists. Intel, be careful of that one. And we'll wrap it up, folks. Don't forget about Market Insights, my dad's newsletter. You can save 75% off the first month. We're running a special. Just use code MI75 off. All the details right there on the order page. Check it out, as well as his positions this year. Great return. Folks, thanks so much. Fast Market coming up now.